In today's show, asset giant Fidelity analyzes a model which forecasts the Bitcoin price rise to $1 million. That's right, the trillion-dollar asset manager Fidelity is scrutinizing a popular and controversial Bitcoin price model, better known as the stock to flow, which I cover quite often here in the show. The pseudonymous crypto analyst PlanB predicted that the Bitcoin value will soar to $1 million by 2029. As we can see right here, Bitcoin path to $1 million, which I'll be breaking down right here in today's show. And as you can see, in 1 year, the stock to flow predicts the Bitcoin price reach $100,000 for the first time. And also in today's show, I'll be sharing the latest from PlanB of the stock to flow model, who just tweeted Bitcoin asymmetric return. In the last 10 years, from 2011 to 2020, we had 2 years negative returns. 2014 and 2018 crypto winter, we had 3 years with returns from 25 to 100% in 2015, 2019, and 2020, and 5 years with 100% or greater return, of which 3 years 1,000% returns or greater. I'll be breaking all this down for you in today's show. Also in today's episode, Bloomberg predicts gold could run to 3,000 and Bitcoin at 20K in this current bull run. That's right, according to top Bloomberg intelligence analyst Mike McGlone. He said in a June update that the crypto could hit $20,000 by the end of this year, citing increasing favorable fundamental and technical factors, which I'll be breaking down for you here in today's show. Also in today's episode, Tyler Winklevoss says the US Fed is the biggest booster of the Bitcoin price. He recently tweeted right here, the Fed, under the leadership of Jerome Powell, continues to be Bitcoin's biggest booster. On Thursday, he will deliver a speech about how the Fed will begin targeting higher inflation. I'll be giving you all the details right here in today's show. We'll also be taking a look at the overall crypto market. As we can see, Bitcoin, Ethereum, and all the major cryptos back in the red. But where's the Bitcoin price likely to go from here? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. So be sure to smash that subscribe button and turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And before we kick off today's show, if interested in tapping into OPM and leveraging other people's money to grow your wealth and crypto portfolio, smash the link right below this video in the description. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. We have a lot to discuss today, but let's kick it off by diving into today's top story of the day. And this is pretty major, especially coming from Fidelity. They analyze a model which forecasts the Bitcoin rise to $1 million, better known as the stock to flow. The trillion-dollar asset manager Fidelity is scrutinizing a popular and controversial Bitcoin price model. A recent report from Fidelity Digital Assets analyzes the stock to flow ratio, which divides the amount of the commodity in circulation by the amount mined per year. Now, using the correlation between an asset's price and its stock to flow ratio, the pseudo-anonymous crypto analyst, better known as PlanB, has predicted that Bitcoin's value will soar to $1 million by 2029. I repeat, according to the infamous stock to flow model, it predicts that the Bitcoin value will soar to $1 million by 2029. If you feel this is likely to happen, smash that like button, smash the subscribe button, and drop me a comment right down below. And taking a look at this tweet from PlanB, Bitcoin's path to $1 million. I'll also include this in the show notes below the video, in the description for you to reference and check it out for yourself. Now, although there is a fierce debate on whether the stock to flow ratio is an accurate way to forecast Bitcoin's trajectory, now personally, I feel it's the most accurate Bitcoin price prediction model in existence. If you know one more accurate, let me know and we'll talk about it here on the show. Fidelity says that the model is a credible tool for analyzing scarce assets. Now, that's saying a lot considering that Fidelity manages over $1 trillion, a pretty big deal. The firm says historically, the metric is a sound way to judge whether a given commodity will become a successful store of value. Here's a quote directly from them. Commodities with a stock that is difficult to double due to a low rate of production relative to existing supply have historically served as superior stores of value. Such commodities are largely used for investment purposes and occasionally industrial uses. On the other hand, consumable commodities that are susceptible to large increases in supply are less effective effective in storing value. In the Bitcoin standard, Safety and Amos adapted a stock to flow to compare Bitcoin to commodities used for investment and consumption, and the use of the metric has since expanded and has been given rise to models based on the ratio. Gold, the most resilient store of value through the ages, has the highest stock to flow ratio, followed by Bitcoin as of today, and silver, following the recent halving which occurred back in May of 2020 this year. The gap between the gold and Bitcoin ratio compressed. Bitcoin stock to flow will eclipse that of gold following the next halving in 2024. I repeat, Bitcoin stock to flow will eclipse that of gold following the next halving in 2024. So as you can see right here on the stock to flow ratio, Bitcoin in 2025 is dwarfing gold as well as all the rest. Now, Grayscale echoes Fidelity's assessment that commodities with high stock to flow ratios are typically sought after by investors. The investment giant looks at Bitcoin to illustrate the positive correlation between an asset's price and its stock to flow ratio. It's very basic math. There's certain demand and there is a limited supply, but guess what? With gold and precious metals, there is no market cap. Nobody knows if there truly is a limited supply, probably because there isn't a scarce limited supply. As we have with Bitcoin, we have true scarcity for the first time in a monetary supply or monetary system. Grayscale goes on to share, commodities with high stock to flow ratios, such as Bitcoin, gold, and silver, have historically been utilized as stores of value. Figure 10, as you can see right here on your screen, shows a popular model that uses Bitcoin's historical relationship between price and stock to flow to estimate a future price. And this shows the actual stock to flow model from January 1st, 2013 to August 1st of 2020. However, Grayscale cautions that the stock to flow price model does not guarantee an increase in the asset's value. They go on to share, while it's true that the price has followed the stock to flow model with high correlation, the relationship may be spurious and does not take into account the requisite demand for price appreciation. So there you have it, a $1 million Bitcoin price trajectory by the year 2029, and asset giant Fidelity analyzing the infamous stock to flow forecast, which does predict Bitcoin rising on up to $1 million. And while we're discussing the infamous stock to flow model, if you're not familiar with it, it also predicts that in 1 year, or on August 16th, 2021 to be exact, the Bitcoin price will cross $100,000 for the first time. And now let's actually take a look at PlanB's most recent tweet he shared this morning. Bitcoin asymmetric return in the last 10 years from 2011 to 2020. We've had 2 years negative returns, aka crypto winters in 2014 and 2018. We had 3 years with 25% to 100% returns, which was 2015, 2019, and 2020. And 5 years we've had 100% return or greater, of which 3 of those years were 1,000% returns or greater. Not too shabby, right? And taking a look at some of the responses to this tweet, we had the Moon Carl respond, Bitcoin is unique because of its fantastic monetary properties. It's the best form of money in the world, and I'm seeing 5 million per Bitcoin as a possible scenario when the fiat system collapses further in today's money. Touche. And eCoin Metrics responded, and there is still 10x to go just to get to that same market cap as Apple. And he shared this, Bitcoin market cap in context as of August 18th, 2020. How much must one Bitcoin be worth to match the market cap of those assets? And as we can see, to match the US M2 money supply, Bitcoin needs to be at $989,000. To match gold, Bitcoin needs to be at $487,000. To match Apple, Bitcoin must be at $106,000. To match Facebook, it must be at $40,000. Visa, we're talking about a $23,000 Bitcoin price. JP Morgan, we're talking about a $16,500 Bitcoin price. And to match that of Jeff Bezos, we need Bitcoin above $10,200, which we're already above. And Ethereum, Bitcoin at $2,600. Pretty cool, right? And taking a look at one more response, we have Total Freedom, who wrote, I can't think of an asset with a better ROI than Bitcoin in the history of mankind. If there is, please someone point it to me. I doubt we'll find one, even if we go all the way back to the Neanderthal age. LOL. And I agree 100%. Let me know if you agree in the comments right down below. And before we break down our next story of the day, Bloomberg predicts gold at 3K and Bitcoin at 20,000 in this current bull run. First, let's take a look at the overall crypto market. We can see Bitcoin, Ethereum, and all the major altcoins back in the red. We fell below that critical $11,500 support. Bitcoin maintaining just above 11,300 right now, down 1.2% for the day. We have Ethereum down 2.8%, trading at $379. Chainlink down 0.6%, trading at $14.28. XRP down 1.6%, trading at 27 cents. And EOS down 5%, trading at $3.07. Personally, I would love to see Bitcoin retest that $12,000 resistance, but before we can do that, we need to now break back above that 11,500 resistance, flip it to a support. And also, let's keep in mind, I feel personally, as long as we can stay above 10,500 support, we'll remain bullish. If we break below that 10,500 support, we're more than likely to fill in some of those CME futures gaps, which are right below that $10,000 mark. However, we'll see what happens from here. Let me know if you're currently bullish or bearish on the king of all crypto. And now taking a look at some of the top exchange volume, we can see Binance up 40% for the day with 9.5 billion in volume. OKEX up 112% with 3.6 billion. We have Hobby Global up 30% with 2.6 billion. Hit BTC up 19% with 910 million, and BitMEX down 7% with 2.5 billion in volume in the past 24 hours. Overall, it's good to see that the majority of the exchanges are back in the green. You feel me? All right, now let's break down our next story of the day, shall we? A bullish comment on gold by top Bloomberg intelligence analyst could leave Bitcoin in a similar upside spell. Let's get it. The firm's senior commodity strategist, Mike McGlone, shout out to Mr. McGlone, said in his August update that he expects the precious metals price trajectory to accelerate. The analyst took to the upside cues from favorable macroeconomic fundamentals led by a bearish US dollar and expectations of a correction in equities. Here's what he went on to share. When bear markets in the dollar and equities arise, gold will gain sustainable tailwinds. He noted a $3,000 gold price is ahead. Gold hit an all-time high earlier this year, back in August, after breaching over its 2011 high of $1,920 per ounce. The precious metal later paired part of its gains on growing selling pressure near its top. While many analysts saw the correction as the end of the gold bull run, some, like Mr. McGlone, made their bets in favor of the continued upside momentum. In his August note, the strategist said that gold is in its early stage of what appears to be a long-term bull run. He stressed an ongoing financial crisis that has prompted central banks to launch open-ended quantitative easing programs, and he's talking about the trillions currently being printed out of thin air. If you didn't know, just in the past 30 days alone, the Fed printed more money out of thin air than in the history of the Federal Reserve combined, just to give you an idea of how much money printing is truly going on right now. So no wonder people are bullish on precious metals and any asset hedging against the US dollar. And of course, Bitcoin being superior to precious metals, as there is a genuine market cap and a true scarcity in which we cannot say the same about precious metals. That has so far created a negative pressure on the US dollar and has accelerated gold's upward trajectory. He goes on to share, central banks essentially printing money to spur inflation is a solid foundation for the benchmark store of value. McGlone said gold bottomed at 700 in 2008 and peaked near 1900 in 2011. A similar velocity of 2.7x advance from this year's low close near 1470 would approach $4,000 by 2023. So there you have a bullish gold prediction from Mike McGlone saying we will approach $4,000 per ounce by 2023. If you feel this is likely, let me know in the comments right down below. Even if you disagree, holla at your boy. You know what I mean? Don't be a stranger. He added that the precious metal could at least hit 3K in the current bull run on fears of higher inflation. Now let's discuss his predictions on the king of all crypto. Mr. McGlone earlier envisioned Bitcoin in a similar upward trajectory. Let's go BTC. The analyst said in its June update that the crypto could hit $20,000, returning to its all-time high before the end of this year, citing increasingly favorable fundamental and technical factors. They included its maturity as an asset, followed by its rising futures open interest and more buy and hold strategy among institutional investors. That's right. He goes on to share, Bitcoin ended 2019 at about 7K, near the bottom of its range, favoring a shift towards the peak. And last year, the high was about 14,000, which would translate into almost double in 2020 if rotating with the recent ban, Mr. McGlone explained. Now, meanwhile, the analyst cited the same macro factors behind the Bitcoin potential bull run that favored gold. He said the central bank's quantitative easing policy drove further demand for Bitcoin among investors. It's also reduced the crypto's price volatility. He went on to share, something unexpected needs to happen for Bitcoin's price to stop doing what it's been doing for almost the past decade, appreciating. Mr. McGlone commented last week, demand and adoption metrics remain favorable versus the crypto asset's unique attribute of fixed supply. And there you have it, because Bitcoin is the first asset with a truly fixed supply. Can't say the same for gold. So if you're bullish on gold, you should be even more bullish on the king of all crypto. Just saying. Now, the statement came as Bitcoin, like gold, experienced a sizable sell-off, which is happening right now, as its year-to-date high above 12,000. The crypto later corrected lower, but maintained its support above the $11,400 to $12,000 range. That allowed many analysts to predict a continuation on its 2020 price rally. That's what I feel. I feel this price rally is just getting started. Right now, we're experiencing a healthy correction. Expect it. Bitcoin's just doing what Bitcoin does. Nothing new. You feel me? That's right. Bitcoin was trading at about 11,700 before correcting down to where we're currently at, just above that $11,200 support. And again, this is nothing new for Bitcoin. Bitcoin's just doing Bitcoin things, if you ask me. And before I break down our next story of the day, Tyler Winklevoss, a Bitcoin billionaire, says the US Fed is the biggest booster of the Bitcoin price. And before I break this down, let's actually first take a look at the overall crypto market cap, sitting at $354 billion with $109 billion in volume in the past 24 hours. And the current Bitcoin dominance is 59.2% according to CoinMarketCap. And if we take into consideration excluding stablecoins and ICOs, the realized market cap, which is the true Bitcoin dominance, is closer to 80%. And now taking a look at the top gainers within the top 100. Let's go. We have Oregon up 15%, trading just above $8. Aave up 13%, trading at 82 cents. Solana up 11%, trading at $3.56. Reserve Rights up almost 10%, trading at 2.6 cents. Bitcoin Diamond up 7%, trading at 82 cents. And FTX token up 5%, trading at $3.61. Below that, we have Golem up almost 5% and Hyperon up 4.5%. And taking a look at this list of top gainers, which altcoins in particular are you most bullish on? Drop me a comment right down below. And now taking a look at the biggest losers within the top 100 in the past 24 hours, we have Bancor down 10%, trading at $1.75. iExec RLC down 10%, trading at $1.54. OMG Network down 9%, trading at $5.15. Basic Attention Token down 8%, trading at 35 cents. Waves down 8%, trading at $3.25. And Nervos Network down 7%, trading at 0.006. Below that, we have IOTA down 7% and Algorand down 7%. Once again, out of this list of altcoins, which alts in particular are you most bullish on? Drop me a comment right down below. And now checking out the BitMEX margins, we can see the bears are still in control, leading with the 124 million in superiority in the last 24 hours, with shorts leading 52.9% versus 47.06% longs. Are you currently bullish or bearish on the king of all crypto? Drop me a comment right down below. And now checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 76 in extreme greed. Yesterday was a 75 with greed, and last week an 80 in extreme greed. And last month we were a 58 in greed. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That can be a great buying opportunity, aka BTFD, buy the frickin' dip. And when investors are getting too greedy, like we're witnessing right now, that means the market is due for a correction. So again, this is nothing new, just Bitcoin doing Bitcoin things. You feel me? All right, and before I break down this final story of the day with Tyler Winklevoss, as well as the Fed continuing to print money, boosting Bitcoin, first, I want to encourage you to smash the show more button right below this video in the description for a detailed analysis of what's going on in the market. This goes for all 500 plus videos right here on this channel. Also have some very helpful resources for you to plug into, including the blog to my podcast, which could be found at cryptonewsyes.com. Not only is this updated every single day, it also allows you to download the latest episode of the show in MP3 format. Also, I'm about to cross 100,000 podcast downloads. We're currently at over 99,000. So I just want to say I appreciate your continued support on iTunes, Spotify, and all the major podcasting communities. Also, be sure to smash that subscribe button right below this video in the description, or visit the direct link, which is cryptonewsalerts.net. You can also follow us on Crypto Twitter to receive daily crypto news alerts. My Twitter handle is cryptonewsyes. And for those of you active on Facebook, as I am, I do have a crypto Facebook group entitled Crypto Alchemy with over 17,000 cryptopreneurs from all over the world, just like yourself. To join it, simply click this link, request to join. I'll be sure to plug you in. And for those of you active on Telegram, as I am, I do have a crypto Telegram chat. To join it, click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. All right, now let's break down our final story of the day, shall we? Bitcoin is is getting the most of its price support from the Federal Reserve itself. Entrepreneur Tyler Winklevoss believes. In a tweet on August 25th, the Gemini Exchange co-founder argued that the Fed policy is and will continue to bolster Bitcoin's fortunes. Taking a look at his tweet, the Fed, under the leadership of Jerome Powell, continues to be Bitcoin's biggest booster. On Thursday, he will deliver a speech about how the Fed will begin targeting higher inflation. So obviously, it doesn't get much more bullish than that for Bitcoin. So an inflation boost is a Bitcoin boost. The reason Winklevoss said that is that the fallout from coronavirus containment measures across the United States economy will mean that central banks accidentally makes Bitcoin more appealing and the dollar less so. I agree. Let me know if you agree right down below. Now on Thursday, the Fed Chairman Jerome Powell will deliver a speech that commentators expect will contain an announcement on letting inflation rise dramatically. This alone makes Bitcoin, which has a fixed, unalterable issuance and supply, instantly attractive. As we all know, there is a 21 million supply market cap on Bitcoin, and there is an infinite supply on gold. Just saying, I'm rubbing it in just a little bit. Hey, it is what it is. Now, anticipation around the Fed inadvertently plugging safe havens such as gold and Bitcoin has been building as both assets seen price surges in line with rises in central banks' balance sheets. Earlier this month, Edward Yardeni, president of Yardeni Research, said that the heightened inflation targets would be wildly bullish for precious metals. We have Bitcoin inflation currently at 1.82% coming from charts.woodbull.com. Now check this out. Meanwhile, Bloomberg reports that interest rates should remain near zero for 5 years, with the potential for longer periods not ruled out. We all know this is a sign of the times. It's not looking good for fiat, to say the least. That would mimic behavior following the 2008 global financial crisis, which saw rates kept underchanged at near 0% until the end of 2015. I wouldn't be surprised if interest rates are still zero 5 years from now, ex-chief White House economist Jason Furman told the publication. And as we can see right here, the Fed to again hold rates near zero for 5 years. I wouldn't be surprised if we also get negative interest rates once again, which is a great sign that the US dollar is on the verge of collapse. Now, the Fed has so far steered clear of negative interest rates, diverging from a practice that has been present under the auspices of the European central banks for several years. In May, a report argued that Bitcoin was a natural focus for fund managers aiming to mitigate the impact of such a financial policy. So let me know your thoughts regarding the Fed continuously printing money and targeting hyperinflation. How do you feel this is likely to affect the Bitcoin price? I feel Bitcoin is going to soar. It's only a matter of time. Yes, we've had a long crypto winter since like the beginning of 2018, but now is a sign of the time. We just had a Bitcoin halving 3 months ago. We have a lot of macroeconomic factors that are extremely bullish. We have massive institutional demand, which did not exist back in 2017. We have companies that are publicly traded on the NASDAQ, such as MicroStrategy, which recently purchased over 21,000 Bitcoins and now controls 0.1% of the overall Bitcoin supply. We have companies like the Grayscale Bitcoin Trust purchasing more Bitcoin than is actually being mined. We have banks who want to hold on to your cryptocurrency via custodian services. So as you can see, things are uberly bullish. Where do you feel the Bitcoin price is likely to be 1 year from now? Do you agree with the stock to flow that Bitcoin price will be hovering above $100,000 by August 16th, 2021? Drop me a comment right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button and turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And real quick before I go, if interested in tapping into OPM and leveraging other people's money to grow your wealth and crypto portfolio, smash the link right below this video in the description and register for this free system entitled OPM Wealth. You'll be glad you did, and I look forward to seeing you on tomorrow's episode. Peace.